This is a little useful. This is using the last highs, lows, and closes to determine a trend direction. I like to look at it, because it adds a little forward into what the direction is. But I don't use it for entries, just direction. Kind of like just like the trend, just like this trend. So another interesting thing is, okay, so this started yesterday, actually around what time? 9 GMT, 10 GMT. Okay, it started, said, okay, it's time to go up. Okay, but this time, it also said arrow, it's time to go down, right? But there wasn't much, wasn't much activity here. Wasn't much rate change. But at this time, we're starting to. It looks like we're having some rate change. So at this time, we were not so sure how much it would make. But then everyone knows that the 61% retracement is very important. So what's happening now? It's breaking the 61% retracement. So what that tells us is that, and also this here, if this is used as support, what that tells us is that this indicator is halfway, is or is not halfway through to making a lot of money, at least probably 2 times more than what you see here. So we have a little more confidence in this entry, and our profit. Now, what I said is in the last file, which was corrupted. That's why I'm making a new file here. The last file, okay, what I said was that this indicator is 1,000 euro, which is around 1.4 thousand US dollars. Now, when you load this indicator, okay, when you use it, I have used it for the last, I'm not going to say half a year, but almost that. All right, I've used it for the last quarter, okay, of this year. And when I load this indicator, it shows identical. The entries you see, it always shows identical to the entries that it had originally calculated. Okay, this entry was the original entry. I opened this chart this morning. Okay, because my girlfriend always makes me close my charts every night. So when I open them, I have a new chart to look at. But this indicator was the original, or this entry was the original entry, and this entry was the original entry. I remember watching this 4 days ago. This entry was the original entry. This was the original entry. This was the original entry. So what you see, it's kind of like what you see is what you get. That's what they say with WYSIWYG, right? That's what WYSIWYG is what you see is what you get. This indicator is kind of like a WYSIWYG entries. So you don't have to worry. When you open this, you will see something. And now what I suggest is you use the Euro USD M5, okay, the Euro USD M5. I always use this. You can use the Euro USD M1 or the M15 or whatever you want, but I have found through the years that the M5 is very stable. If you use MetaTrader 5, this indicator, I can also supply you this in for MetaTrader 5. I'll supply it to you in MetaTrader 4. I'll supply an expert advisor for both. And I'll also give you information, tell you information how to use cloud servers or virtual private servers, which enable you to, which lets you to run this on the internet live without closing. Without closings, if you turn off your computer, this software is still on the internet and still running, and it's still trading for you. What else? Skype. I have Skype. I provide live support and live talk, so I'll always be on there, and you can always ask questions. And also, I'll have mailing lists for new upgrades and for this. Like I said, I'm working on a multi-acceleration frame um, formula. So right now this uses a combination of it uses a combination of acceleration, of Heikin-Ashi averaging, and I'll leave it at that. What I can do is I can give you the source code if you buy it. So essentially, you're buying the source code, and and I'll explain all of it to you. But there are other properties here, and after I upgrade the acceleration, I will also include those updates to you. So wait for my. If you're interested, my email is sty671@gmail.com. I'll provide my Skype and email and other contact on this description on this website. If you have any questions, please ask. And if you see these other indicators, like this is time zones. These are pivot lines. This is a trend line from the last high-low. Here is a regression, which is I think an exponential. It could make it an exponential regression line. This is a Fibonacci retracement. It's good for 24 GMT, 24 hours. I have found that using retracement provides a lot of confidence in the direction. As you can see here, this retracement is indicating a higher direction. And what would not indicate a higher direction? Again, we have the 23, 38, 50, and 61 percent retracement line. So breaking those would indicate that it is not in the same direction. But how is that useful? Itself is not useful, but if you're using an acceleration, if you're using other indicator like this acceleration, this multi-acceleration frame indicator, okay, that's your main calculation. The acceleration is your main calculation. But then you have these other confidence problems, such as is that enough, or how other ways can I understand the collective market or the collective thinking. And that's where you would use, understanding the retracements, retracement values. I mean, you could say that it's not dropping under 23.6, so there's no way that it's going to try to go against this acceleration indicator, or it's not dropping under 38.2%, so there's no way it's going to try to take my profit from the acceleration. So and on these other days, like the last 3 days, you can see that retracement would have calculated this. Here it's probably no more than a 23 or a 30%, 38 point percent retracement. On this day, there's no retracement. You see, on this day there was no retracement, maybe 23% retracement, and that's what I said. When it's in a trend, it usually does not go lower than a 23% retracement. What's in a strong trend. So these times, these were strong directions. It knew what way it was going. But on this day, you see that there's a swing. Okay, this day had 3 swings, and the retracement, I think, if we're trying to measure this, let's say the retracement was starting upward. So here the rate was moving upward, and then we have here. Okay, so the first direction happens downward. Okay, let's put a retracement here. Now these two directions are quite clear. Okay, these two directions are quite clear that the shape is too small to look at a retracement. But if you look at one thing here, look at where the open is. The open is at the 61.8% retracement. You see, when it was changing direction. So that's what we're saying, is it's 61.8% in any way, inverted and calculated in any way, is important. It represents an irrational approximation, which which cannot be approximated by modern mathematical methods. But if we go to the next, one, so you see that 61.8% was at the open. Now let's go to the next one and see where's here's retracement, and we're calculating this. It continues up. So we break this, so we're saying, okay, we're going in the new direction, going in the new high. So where's the new retracement? The new retracement, okay, stops here. Now it's time to retrace. Where is the 61.8%? 61.8% is here, which happens to be where? Happens to be at the high, the last high of that time, you see. So, and how did we remember when this was used, okay, to show the break of retracement here? That was the